Hello again and good day to all friends. This is Mojtaba Rasti from the Thales team, and today is October 21st, 2025. I'm here with you to analyze Bitcoin using the Thales Market Screener tool. Please note that these analyses are for educational and informational purposes only, and if you use them to take positions in the market, the responsibility for any profit or loss is entirely your own. Well, yesterday we expected that from the point where the price was, around 111,500, we would see another upward move, considering how close we were to our upper zone, and that it would collect liquidity up to about 112,500 and then move downward. But the price moved directly downward from that point. For now, we're seeing some support around 108,000 to 107,500. We can draw a trend line here like this, and as you can see, for now, it has provided some support. Let's see how things will develop in the coming hours. With this downward move, the important RSI has dropped below the moving average. It broke both the moving average and the 50% level and settled below them. On the daily chart as well, you can see that this downward move was actually a pullback to the moving average, an RSI pullback to the moving average, and this red candle was actually a rejection by the moving average. All of this shows that this downward movement could continue. In fact, it could very well continue. But for now, at this level, we're actually seeing some signs of support. Let's move on to the market screener to see what we have for today, from the start of today until now, for tomorrow's expiration. On October 22nd, according to the SCOM database, 4,627 bitcoins have been traded in the form of 1,738 options contracts. The result of that is this is a curve that, at first glance, is actually a downward sloping curve. If we turn on the delta, you'll see that. Right where the price is currently sitting, around 184, we're positioned between call sellers and put sellers. To the downside, up to about 102,000, we mostly have put selling, and ultimately, the lowest levels seen are around 101,000 to 102,000. To the upside, as it holds, we see a decrease in delta until the ceiling is reached at around 115, which is well known. After 115,000, the delta turns bullish again, which, as you know, means call buying. Here, below 101,000, puts are being bought. So right now, we're basically trapped between a floor and a ceiling. If we move the slider forward, this trapped situation becomes clear here. 848 Bitcoin trades that have come in since today at 1:30 p.m. after 1 o'clock in the afternoon. You can see that the volatility situation shows a floor around 104 and a ceiling at about 113 or 114. For tomorrow, recent trades in the last hour have predicted this kind of volatility. This downward pattern has probably played out. You see, with this downward move we're in, this bearish outlook has likely been absorbed to some extent, right up to where we are now. This knot that exists here in the delta has been somewhat absorbed. We might have another floor ahead, from this point down to 102, and we'll see how much this can actually play out over that distance. That's something we need to watch in the coming hours. If we go into the process database, you can see that there's a possibility for movement in both directions. Of course, if we zoom in for a closer look, we see that the same interpretation we had in the database can be made here as well. From where we are now, we see an increase in delta toward higher prices up to 111, and an increase in delta toward lower prices down to 104, 105. So again, we're fluctuating here between about 105 and 112. This range is volatile for tomorrow. If we move the slide forward here as well, you'll see that in the final trades, we reach the same volatility as in the first database, that is, a fluctuation between 104 and 112, as we mentioned. So for tomorrow, we expect volatility between these two support and resistance levels. The process database also doesn't really need to filter the open interest. We don't have negative open interest. We don't really have anything that would affect the trades. All right. Let's move to the raw database and start plotting the indicator and the zones. Now, you can see the intersection of the buyer and seller curves. At the top, the agreement is at 111,300, which is at a loss, and at the bottom, the agreement is at 105,500, which is in profit. The zone created at the bottom is also a zone of agreement between buyers and sellers. The seller doesn't want to go below 104,700, but the buyer is looking at anything below 105,800. This zone is a place of agreement, while at the top, our zone is a place of disagreement. Buyers and sellers have differences of opinion there, which is why this area stands out. From this point on, with the intersection of the curves formed, we can give more weight to a move downward toward 105,000. Enter these points into the indicator and continue. Well, you can see that tomorrow's high and low are both lower. Our high has decreased compared to yesterday, and our low has also decreased compared to yesterday. But they're still in an upward trend. Compared to the low from 2 days ago and previous days, you can see that our low has formed higher and our high is also on an upward path. So, we're still seeing a shift in price here. So, considering the RSI situation and actually this downward trend we're in here, it seems that this downward trend, given the state of our indicator bands, will probably continue downward and could move toward 105,000. Let's update the zones and keep going. Alright, you can see the zones here. The lower zone is wider than the upper zone. As we mentioned, the point of agreement is in the profit area, and the zone that has formed is also an agreement zone on the lower side. So, the likelihood of a move downward is higher. Basically, our lower zone is from about 104,800 to 105,800. The upper zone is from 110,900 to about 111,700, and the middle zone is from 108,000 to 109,000, which is where we are right now, in the middle zone. Basically, we're just passing time with the price. So, based on this perspective we've analyzed, the probability of moving downward is still higher. Let's go and activate the raw data page for the sell contracts to see what the delta and gamma are. Because we can interpret them, the strongest steps we have are actually the negative steps, the short steps, at 111,500. Here, most of these are actually due to call selling. These short steps are from call selling by the taker at 111,500, which makes us the maker at 111,500. Here, in our zone, you can see it basically created a resistance area, and the price has already reacted to it once and moved back down. So, at 111,500, our long gamma as the maker is there, and we have a gamma to the downside. Actually, there are two gammas, a weaker conditional gamma to the downside at 104, which is also a long gamma for the maker. The 104 comes and sits here, roughly. And after that, there's another gamma to the downside at 98,000, which is also relatively strong. These are actually put buyers, but since the number is relatively lower, we won't plot this one. There's also a gamma to the upside at 117,000, and these are call buyers. You can see these are our main two steps that are keeping the price within this range. It's pretty much the same range we saw on the main curve, where there's a likelihood of fluctuation between those levels, and you can see that we're actually fluctuating within that range. Between these two levels, moving upward, one of the key points we can mention is right here. This is the start of the ascending delta phase. Moving downward, around 109,600, we have the gamma, then here we have the delta-gamma intersection at 112,500, and the intersection of gamma and the red curve, which is also the end of delta, at 115. Finally, we have this gamma at 117. On the lower side of this peak, we actually have gamma at 107, and here there's an intersection between gamma and delta at 104,800. A lower level has formed in gamma here, a dip in gamma at 103,800, and here as well we have a gamma-delta intersection at 101,600, and finally, this gamma at 98,000. These are important points that have essentially formed at the intersections of the curves, and you could say that almost all of them are sensitive and noteworthy points. I'm going to turn off the gamma to make the chart a bit simpler, and let's take a look at. So, if I add October 23rd, the day after tomorrow, you'll see that the downward trend intensifies. It gets even stronger, look, considering the series for October 23rd. Let me also remove the series for tomorrow and just keep October. The possibility of movement in both directions is visible, meaning we can see the chance of a downward move, but we can also see the chance of an upward move. However, you can see that the chance for a downward move is actually higher. The curve is steeper on the downside. If we look at both expiries together, you can see here that the downward trend is stronger. From where we are now, moving down, we have a decrease in delta, meaning puts have been bought for 105,000. Again, when we reach 105,000, as the price drops, we see an increase in delta, meaning 105,000 is a kind of support level where we expect support to hold up to 102,000. And 102,000, which is the delta peak here, if it breaks and doesn't hold as support, then moving further down, we have a high volume of put buying down to 96,000 and 98,000. So, our expectation is still for a downward move, actually. It could be, yeah. Now, we can also take a look at. October 24th is Friday, the end of week expiry, and here you can see we're between top and bottom. 104 is the profit peak on the red curve. Here we have a profit peak at 117,000. And actually, you can see there's another level here. We have a resistance here as well. With the price going up, notice that our delta increases up to 111 from where we are now, and with a price drop, the delta decreases in line with it, coming down to 105 or 106. So you can see these levels are still important for us. Alright, let's go and take a closer look at the trades for tomorrow. There are 4,627 Bitcoin, of which 2,278 Bitcoin are actually option buy orders. Out of this number, 1,100 are call buys and 1,177 are put buys. They're very close to each other. The put buys are about 77 Bitcoin more, which makes sense since, as you can see, we are in a downward trend. This is currently happening. If we go back and look at the candles from the start of the trades, you'll see that it's the puts that are being realized. Where is it aiming for? It wants below 107 and in profit. It wants below 107 and in profit. We've come down to 107 and 600. to a large extent, the calls, have been realized. The target for the call buyers is 1,600 and above. They want the level of 1,600 and above to be in profit. Now you can see the price is moving toward, look, 1,600 has almost stayed up to this upper zone. In fact, there's a possibility of movement, and right now you can see the effect of these calls showing up here. So, the dominance is with the puts. Let's see how the situation is for selling. There are 2,349 Bitcoin option contracts sold, of which 1,343 are call sales and 1,006 are put sales. You can see that call sales are higher here, meaning the calls that are being bought now, the ones we mentioned, are likely being realized, and after the puts that were realized, we're moving upward. The call sellers see a ceiling for this move. Where do they see the ceiling for this bullish move? They see the ceiling at 1,600. Actually, if we look at the trend, they see it at 1,900, this upper zone. This upper zone could be the end of this bullish move, and the sellers are basically standing in the way of this rally. So, in fact, against this bullish move, which could be the result of the call buyers' actions, you can see that the sellers have set a ceiling. This probably won't be able to turn into a very strong rally. Where have the put sellers set the floor? Look, the put sellers don't want to go below 106, which is around here. See 105,700 and 106 right here. But our lower zone is actually the target of the put sellers who have set the floor, so it could actually materialize as the price floor. Alright, now we've come to the process database. In the process database, let's look at the high volumes, 15 Bitcoins and above. We have 67 contracts. Now, for contracts above 20 Bitcoins, there are 60 contracts. 25 Bitcoins is still a lot. Actually, let's lower the contract size so we can talk about it more easily. For 30 Bitcoins and above, we have 14 contracts. So, two strategies can be seen among these, in general, and both are visible in the trade track. And we have two strategies. Let me explain. Of course, this isn't a very special strategy, it's just that puts have been bought. The puts that I bought, 150 Bitcoins below 16,800, are actually in profit. This strategy also involves 1,000 Bitcoins, which is a lot. Basically, a long strangle has been taken. It profits below 100,000 on the downside and above 114,000 on the upside. It's actually a neutral strategy that doesn't really take a strong stance on direction. Well, if we set the trade volume filter to 25, we also have a lot of strategies here that are with a volume of 25 Bitcoins. Altogether, if we consider the total number of these trades that are active, the total is about 400 Bitcoins. In fact, the short strangle strategy has been adopted, which really helps us to see that the volatility range is from around 104 up to about 112. Down here to 112, which is actually a little higher than this level. So actually, this is our upper zone, which gives us a volatility range for tomorrow. Well, as you can see, on the lower side of our table, again, you can see that we have about 400 more Bitcoins with a short strangle strategy, which covers the volatility range from 104 to 112. So, in total, 800 Bitcoins have taken on this kind of strategy for tomorrow, targeting the floor and ceiling between 104, 105 up to 112. But the point is, in contrast to all of these, we have 1,000 bitcoins with a long strangle strategy, which is really significant for tomorrow. And what does this mean? It means that for tomorrow, there's an expectation of a sharp increase in volatility, because from the top side, it wants to break through 113,500, and from the bottom side, it wants to break through 100,000 to the downside to profit. And right now, with this movement, we're heading toward, as you can see, the 112,000 level. Okay, let's take a look at the 24-hour liquidations. Well, as you can see here, in the past 24 hours, we have liquidity on the upside up to 113,000, and with the intensity that the price is moving, it seems like it's aiming to attack this upper liquidity. In fact, it's making another move toward 112,000 to reclaim this high. Now, let's look at the 48-hour chart. Again, in the 48-hour chart, you can see the strong accumulation of liquidity on the upside, with liquidity up to 113,500 on the upper side. On the lower side, liquidity is around 106,000 to about 107,500. So right now, it's clear that the price is targeting the upper liquidity for a potential liquidity grab. Alright, now if we want to make a final summary, considering the sale of the contracts that we've observed, it seems that we're moving toward testing that ceiling which the contract sellers have identified. Now, the question is, can we break through this ceiling with this attack? A ceiling around 112,000 or not, if you take a look here, if we check the RSI, it's making a pullback to its moving average. If we switch to the daily time frame, maybe the picture becomes clearer. Look, in the daily time frame, today's candle, after that sharp upward move, has turned exactly into a hanging man. There's about 10 hours left for this candle. If it closes like this, and even this move, you can see in the daily RSI, it's just a pullback to the moving average, which means it could get rejected. But here, you see this move down, then back up, and with this bullish candle, if today's candle closes as a hanging man, that's a strong signal that the momentum of this bullish move has weakened. So, for tomorrow, we can expect a long-bodied red candle, probably heading downward. If we consider all of this, I think we can actually go to the 4-hour chart and imagine a scenario with higher probability. We came down, then went up again to test the ceiling, the upper zone, around 111,000 to 112,000, and then probably move down toward the 105,000 support area. So, something like this. This is a scenario we can probably imagine. So, what's the second scenario? The second scenario is that from right here, we break this ceiling, break through this resistance, and move upward. If this ceiling is broken, let me change the color as well. Like this is the second scenario. If it manages to break this ceiling, naturally there will be a pullback to confirm the breakout, and it will reclaim the ceiling, possibly along with the 113,500 and 114,000 levels. At that point, our bullish scenario becomes more likely. But it seems the scenario to the downside still has more weight. Thank you for your attention. I hope this was helpful.